Welcome to Bauhaus Weekly Wrap-Up, Week 45. Week 45 was dominated by geopolitical turmoil, including a trucking apocalypse, Nigerian defiance against U.S. military presence, and a suspected sabotage-induced Portland blackout. This friction, alongside disappointing progress between Trump and Xi, caused market wobbles. Central bankers Miran, Fed, and Lagarde, ECB, signaled data dependency and steadiness amid tariff threats. Consequently, logistics and transportation sectors suffered, while AI stocks like Palantir and ClearBlade surged, making volatility the central theme and adaptation crucial for navigating equity and bond markets. Let's dive in. Geopolitics and trade. The week's volatility began in the cargo bays with China's partial suspension of U.S. agricultural tariffs. This move, despite sparking trade thaw headlines, is merely damage control, as soybeans still face duties and Brazil remains the cheaper supplier. Consequently, logistics companies faced climbing freight backlogs and compliance audits, forcing them to reroute lanes through Southeast Asia. This tightening capacity caused freight indexes to rise again, signaling further market pressure into the holiday season. Central banks and macro. Fed Governor Stephen Miran warned that data-dependent policy risks being backward-looking, essentially admitting the Fed is navigating with outdated information. This fog was thickened by delayed economic releases due to the ongoing government shutdown, which amplified uncertainty across both bond and equity markets. Markets and AI. The Nasdaq experienced its sharpest drop since April, falling around 3%, primarily due to valuation pressure on AI-linked stocks. This market tension reflects a conflict between the indispensable need for AI infrastructure, chips, data centers, power grid, and negative public sentiment driven by headlines about AI-related job displacement. Key tech stocks showed volatility. Palantir's wild post-earnings swing, Broadcom's steady outlook based on backlog, and warnings from Microsoft and Google about higher capital expenditure with slower visibility on return on investment (ROI). These movements highlight that even though AI infrastructure is critical, rapid growth brings risks like overvaluation and unpredictable earnings. Investors should focus on companies with strong fundamentals and robust AI infrastructure for long-term value, remaining cautious about heavily hyped firms lacking proven profitability. Message from the founder.
Hello everyone, Eric here. Every headline this week carried the same shadow, a decline in confidence, from Main Street wallets, or lack thereof, to Wall Street terminals. Everyone's asking, can technology and AI lift us faster than uncertainty drags us down? Our role at Bauhaus isn't to predict the fog, it's to give you the instruments to fly through it. I do my very best to try to decode the noise so you can focus on the pattern or signal. Markets and the economy are driven by the mood of money. And right now, that mood is one of cautious realism. Keep your curiosity alive and remember, the most powerful investment is understanding.
What's your strategy? Drop your insights in the comments below. And as always, stay sharp, stay curious, and above all, stay Bauhaus. Like, follow, and subscribe to our social media channels for more market insights and analysis.